WatchGuard Capital. Invest your time wisely. In this two-part series, I'm going to show why we need a flat federal tax system and why the current system is broke. This is the IRS's 2019 complete report of individual income tax returns, and you can find tables like this that breaks down the 157,797,000 tax returns that were filed in 2019 by how much income was earned. On the low end, 19,793,000 Americans claimed adjusted gross income between $1,000 and $10,000. And I'll be using this chart to depict relative size of income earning groups. Each one of these black dots is actually a stick figure representing tax filings per 10,000. So these 1,250 stick figures represent the 12.5% of American filers out of 157 million who claimed adjusted gross income from $1,000 to $10,000 on their 2019 tax returns. And on the high end of income earners, this single stick figure represents the relative size of the 21,000 American filers, or 0.01% of the total 157 million tax returns that claimed over $10 million of income in 2019. And all these stick figures is everybody else in between. This table shows you who took standard deductions and who itemized in 2019 by income earned. And these two tables are where I got the data that will show why we need a flat federal tax system. But before I do, we need to review how our current federal tax system works. So let's start with something you've seen before, your W-2. You'll find your wages, tips, and other compensation, or income, in box 1. For easy math, let's assume you made $100,000 in 2019. But if you didn't make that much, don't feel bad, because 80.3% of Americans had less than $100,000 of adjusted gross income in 2019, which is all the stick figures to the left of that red line. And if you had $100,000 or more of adjusted gross income in 2019, you would have been in the top 19.7% of American tax filers for that year. But back to your W-2. You usually find the same amount of income in boxes 3 and 5 because while federal Social Security and Medicare are separate federal taxes, they are levied on the same income, which most people don't really understand. The current tax rate for Social Security is 6.2% for the employer and 6.2% for the employee, or 12.4% total. The current rate for Medicare is 1.45% for the employer and 1.45% for the employee, or 2.9% total. So the first justification for a flat federal tax system is 2 out of the 3 main federal taxes we pay are flat taxes already, 12.4% for Social Security and 2.9% for Medicare, or 15.3% total. But you will only see half of these taxes on your W-2, which on $100,000 of income is $6,200 in federal Social Security tax and $1,450 for federal Medicare tax. On the back end, your employer had to tell the government how much they paid you annually on this form, and they had to remit 12.4% or $12,400 in federal Social Security taxes and 2.9% or $2,900 in federal Medicare taxes because they paid you $100,000. And thus, the total direct and indirect taxes you paid into these programs was $15,300, or a flat federal tax rate of 15.3%, even though you can only see half the taxes on your W-2. And here's an illustration to explain that. Imagine your employer is hiring an employee for the first time and has budgeted $107,650 to pay them, so that's the salary they offer, and that was accepted. Your employer has to collect 6.2% for federal Social Security tax and 1.45% for federal Medicare tax from the employee on the $107,650 salary. But your employer also has to match those amounts, which means it costs your employer $115,885 to pay the employee $107,650, which puts them over budget by $8,235 because of the matching payroll taxes. When you later walk through the door for your interview, your employer learned from their mistake and offers you a reduced $100,000 salary. They still collect 6.2% for federal Social Security and 1.45% for federal Medicare from you, but this time they have to match your payroll taxes, and it's these amounts, or only $7,650, which puts them right on budget at $107,650 total. So there's a good chance your employer already knows how these federal Social Security and Medicare payroll taxes work and already lowered your salary by an offsetting amount to account for the matching payroll taxes. So indirectly, you do pay the full 15.3% for these taxes, even if you only see half of them on your pay stub and W-2. Now let's say we didn't want to continue this employer tax matching system that was decided upon in the 1930s, and your employer just paid you the $107,650 in wages, and deducted the $12,400 directly from your pay for Social Security, which would technically be an effective rate of 11.5%, and the $2,900 from your pay for Medicare, which would technically be an effective rate of 2.7%. The net cost to your employer would still be the same $107,650 either way. The payroll taxes remitted to the government would still be the $15,300 either way, and the net income you received after paying federal Social Security and Medicare taxes would still be $92,350 either way. So that is the second reason to have a flat consolidated federal tax system. It would be a more transparent tax code, which is always a good thing. But now let's talk about your federal income tax, which is a separate and unique tax rate from federal Social Security and Medicare taxes and would go in box 2. Usually you will figure out the amount of federal income tax due for the previous year on an IRS Form 1040 that looks like this. You include all your income from your W-2s on line 1 and any other income you earned on these lines. But to keep things simple in this example, let's assume that you only earned the $100,000 from your job. Then you would figure out if you're taking the standard deduction or itemizing. 138 million out of the 157 million tax filers used the standard deduction and didn't itemize in 2019. So there is an 87.6% chance that you took the standard deduction, which was $12,200 in 2019 for a single person and double that amount, or $24,400 for a married couple. The next step would be to see if you could take the qualified business income or QBI deduction, which was added to our tax code as part of the 2017 Tax Code Act. But it only applied to 22.2 million tax returns out of 157 million in 2019, or 14% of Americans. So there is an 86% chance that you couldn't take this deduction, so let's leave it at 0 in this example. So the amount of money you don't have to pay federal income tax on is $12,200, which means you have taxable federal income of $87,800. And this is the amount that you would plug into the federal income marginal tax brackets ranging from 10 to 35% under our current tax code that most people are familiar with. If you apply the 2019 tax rates to your taxable income, you will find out that you owe an additional $15,247 in federal income tax. If your employer collected that amount throughout the year from your pay, you did not owe any taxes or get a refund. If you paid more than that amount, you got a refund, and if you paid less, you owed taxes. And that is how our individual federal tax system works. Well, basically. In part 2 of this series, I'll address some of the glaring issues in our current tax code, like, does it make sense to extract federal Social Security and Medicare taxes from the bottom 39.2% of American tax filers just to turn around and give them federal income tax credits to keep them out of poverty? Probably not. Does a complex tax code like ours make sense when 98.9% of the population makes less than $500,000 a year? Probably not. Or does it make sense that 94.3% of Americans making under $200,000 don't have to pay federal income tax on $12,000 to $24,000, while 0.01% making over $10 million get to avoid paying federal income taxes on $2.6 million on average? Probably not. And if my calculations are right, and they usually are, and these stacks of cash represent the net incomes of each individual in these groups after paying federal taxes, then these red lines represent the relative political influence of each person in their group. Because in DC, money talks and campaign contributions come with strings attached. Which is why we need a flat federal tax and deduction system, and why our current system is broke.